or qualified through our industry, and all of which are just as capable as myself in giving this advice to people. And it might just be something as simple as helping someone out with a car insurance renewal or helping them in any walk of life. There is no client too big or too small that we can't help or deal with. So just to focus on the areas that I'd like to cover off today, they're broken up into 5 kind of main themes. The first of which is mortgage advice. So it's helping people to either get on the mortgage ladder, or those of you that may have a property or a mortgage that would just like to get some general sound advice. And I think it's definitely an area that I would look into. Those of you that have a tracker mortgage, obviously you hold on to that with dear life, but there's many of us now that may have a variable rate, a fixed rate, and are just looking to get some independent advice as to what the market might look like for them. Can they save money on their existing mortgage? Are they in a position where they might be able to upsize in the future or downsize even? And it's given them broad, I suppose, strokes as to how to do that in a very simplified format. The area of retirement planning, there may be many of you that have a pension scheme through your employment. We offer a service to be able to just provide an independent review and really help you control the things that you can, such as what level of contribution you make and where your funds are invested. For those of you that have one of the older kind of forms of pension, which is known as a defined benefit scheme, which is becoming much less common now, again, it's just giving a bit of assistance and guidance as to what that might look like. The third area, which we've kind of led with really, is saving money on tax. And I will go into a small bit of detail on 1 or 2 areas that I think can help all of you. And I'm happy to discuss them further, as I said, separate to this. Then it's kind of leading into the area of savings and investments. And one of the things that I've been saying to people over the last few months is that it's become, I suppose, very evident to us all that having savings has become extremely important. We all know that the banks, credit unions, post office are not providing any interest at all, unfortunately, and it's about how can we get our money working harder for us. Finally, then, I'm just going to touch upon the area of insurances. There are some insurances that we do sell, such as life insurance, mortgage protection, illness cover, and there's many insurances that we don't sell, the likes of, say, house insurance, car insurance, and health insurance, but we're equally happy to advise clients on. And I would suggest to all of you that there are definitely opportunities to improve your position, either by looking at saving money on equivalent policies, or indeed even superior plans, or just getting some general advice. And again, it's one of the areas that we are reaching out to people to help them with. As you may see on the slide there, we have agencies with over 14 insurance companies. We do not charge for the advice we give. The way that we are remunerated is through the insurance companies that we deal with. But I'd like you to see us as a low-cost broker and one that looks to ensure that we always get best value for our clients. So just to very briefly start by saying that I believe that all of us should do a financial plan at least once a year. This involves a process of just looking at a spreadsheet and completing it with, on the left-hand side, your salary and income in, and on the right-hand side, all of the outgoings that we spend our money on. And it's just a good ready reckoning of just, I suppose, focusing our minds as to what we are spending our money on, and then getting someone like Alpha Wealth to help you and say, well, how can we save money? Can we save you money on your mortgage? Can we assist you in some of the insurances you pay for? Are you missing opportunities as to where you can claim back for certain costs that you have? For example, which I'll talk about in a little while, about the stay-at-home relief that is available to many of us that many of us may not be claiming for, and so on. So just to maybe flesh this out a small bit further, we often advise people around some of the costs that they bear, such as bank fees. How can you navigate the bank to ensure that you are mitigating or avoiding the fees that you may pay? For those of you that may have pension schemes from previous employments, are you aware of what fees that you are paying, and can you improve your position? Many of us have, or all of us have, these kind of smartphones. Do you pay for insurance on your smartphone? What are you actually getting for your insurance? And it's a case of just getting, as I said earlier, proper sound advice and knowing what you should cover for and maybe what you can do without, essentially. Okay, and we're not biased in this. As I said to you, we don't sell certain insurances, so we're really just trying to help people and help our clients out as much as we can. So in terms of mortgages, I kind of mentioned earlier that there are many of us that may be looking to try and get a mortgage, or there may be many of us that have a mortgage and are not quite sure whether there is an opportunity for us to do anything that can improve our position. What I would say is that the one number that I always ask clients for is, what is the interest rate for the mortgage that you currently have? And a lot of people may not necessarily know this, and it's really important that you do. So for example, you may be on a variable rate mortgage with Bank of Ireland or AIB or one of the other institutions. And it's always a case that you should know what is the current rate of interest. Because once we know that, that's when we can offer advice to people. As a general, very high level view, I firmly believe that anyone who's paying more than 2.5% a year of interest on their mortgage should consider their options as to whether they can do better for themselves. Now, I caveat that by saying that if it's an investment property, typically the rates are higher. But again, there is some wriggle room and there is an ability for people to negotiate. What a lot of us suffer from is a lack of time. And I suppose you've taken the time today to listen to this webinar. It's quite easy, and it doesn't always involve moving banks. What I say to people is, look, it's about getting information and then being armed with that information to be able to talk to your own bank. And in most cases, you find that it's staying in the institution you're with, but being able to obviously achieve better rates for yourselves. For those of you that are looking to get a mortgage, we help people get mortgage ready. So we help them, I suppose, in terms of building up savings. We help them to get into the best position possible to, I suppose, convince the bank that they are a safe bet. And that's one of the things I suppose I would say to people in the climate that we find ourselves in, that's become more important than ever. So just to move on, I mentioned earlier about pension schemes. As I said, we're not looking to try and sell people pensions who have company pension arrangements. What we're saying to people, you know, whether you work in Dell or whichever company it might be that you work with, is that we can help you by giving you some independent advice around where does your pension lie. You know, particularly post-COVID, a lot of us were maybe unsure about what effect that had. Did we make any adjustments to our pensions during that period? Are we invested too aggressively, or are we invested too conservatively? And there isn't a one-fits-all solution, so it's really important that people do get specific advice to what affects them. Then there's obviously choices around, well, okay, I'm a member of my company pension arrangement, but I'm not paying into additional contributions. Should I be? And some of this is subjective, but again, it's good to get advice from individuals that, as I say, have no bias as to how you can better your position. And it may vary depending on the individual and their own circumstances. So by speaking to a colleague doesn't always help in respect of what you should do for yourself. One of the things that we have found is that in, I suppose, the world that we find ourselves in, many of us have changed jobs more than once. And a lot of us have probably, maybe again, down to not having the time or inclination, or maybe even the knowledge to review what we have. One of the simple processes that we do in Alpha Wealth is that we just provide a very simple, straightforward snapshot of someone's position. So we kind of get clients to sign a no-cost authorization that allows us to go out to the insurance providers, pension companies, and get information based on what someone holds at the moment. We put it on a spreadsheet, and it's a good tool for themselves, if nothing else, just to know what they have, where their funds are, how much they have in each different pot, what they're paying for these, and how maybe they can improve their position. Whether they take our advice or not is completely secondary. There's been a lot said about pensions. Obviously, it came up in the recent, I suppose, elections and so on around the shortfalls, the fact that the pension age was deferred. There's a little bit of uncertainty as to where that might finish up. At the moment, the current pension age is 67. For many of us, I suppose, again, it's all about giving people guidance and assistance about, well, okay, you know, what is a pension? What does it mean for me? you know, how does it benefit me? Is this the only asset I should be focused on? Are there other opportunities available to me? And this is what we offer people. Just to move into home, particularly during COVID, to claim back money, there seems to be a bit of uncertainty around whether people can claim this relief or not. Typically, this €3.20 per day, which is, again, and I can provide the revenue kind of piece on this, it is available to all of us, whether it's done via our employer or whether it's done through our own tax return. But there is an equivalent of this, which is that you can claim 10% of your electricity, heating and phone bills for those of you that work from home. And this is completely legitimate. And it's something that I know myself, having worked at home during this, a lot of the period, that we can perfectly legitimately claim for. It's very straightforward. We can assist you with this at no charge. And again, we're more than happy to provide you the information of. The other tax, I suppose, reduction opportunity that is available to all of you that are currently in the higher rate tax bracket. So typically for most of you who are earning over 37,000 a year, or if you're married and if you're using your spouse's allowance, 47,000 a year or more, that of that income that we suffer at the top rate, there is another option which is called the Employment Investment Incentive Scheme, more commonly abbreviated as the EAAS scheme. Now, we are doing one last webinar on the 15th of July before the sort of summer break on this one topic alone. So if anyone is available and interested, 2 weeks today, we'll be doing the same session at 1 o'clock for specifically geared around that area. But I can talk to people separately, but just to give you a kind of a quick sense of what that means, let's take an example of somebody who's earning, say, 60,000 a year. They are categorically earning at least 10,000 of that at the top rate. That is undoubted. In my opinion, for those individuals, if they have some cash available to them on deposit, anytime between now and the end of the calendar year, they have an opportunity to put some of that cash into one of these government sponsored schemes, whereby they get 40% of a rebate on that contribution over 4 years. And typically that relief is granted to them early next year. So in simple language, what that means is that if you have 10,000 euros sitting in a bank account, and if you are earning 60,000 euros a year or more, in some cases it could be as little as 50,000 euros a year or more, you can invest that 10,000 euros for 4 years. The revenue will give you back 4,000 in quarter one next year. And at the end of the 4-year term, you would be looking to get back your 10,000 euros plus a return of roughly 20% from the company that you lend your money to. If you think about that, it's a double your money scheme. You put in 10, it costs you 6, you get back 12. Now, there is a little bit more to this, but that is essentially the high level detail on that. There is a little bit of risk, obviously, which is that the money that you lend this company to, of which there can be some very, very good quality companies. However, there are some not so good quality ones. An example of which we've provided to clients over the last couple of years would be a company called West Cork Whiskey Distillery. Some of you may be familiar, obviously those of you that drink whiskey. It is a very, very strong company. Their balance sheet, which you would be available to see obviously before any investment, would have shown you, now it's not available in this current year. There is a whiskey company that we are promoting at the moment. It's a Cork-based company. But you'll get a sense of why we say to clients, this is an opportunity, as I say, and there's very few ways of avoiding the tax man, and there's even fewer ways of getting money back from the tax man. This, in conjunction with a pension scheme, are really the only two available to PAYE workers for sure, outside of obviously claiming back these small reliefs that I mentioned. So just to move on, I've kind of alluded to savings. I think we should all be saving. It's easy for me to sit here and say this, but it's important to ensure that we have money for a house purchase, we have money for a new car, we have money for our children's education, or whatever it might be. And it's a case of, you know, I suppose breaking it up into, you know, smaller elements whereby you're saving the 100 euros a month. saving whatever we can afford to save, put in lump sums away when we can afford to, that we then have these funds available. And whilst, as I said, the banks, post office, credit unions are not providing any form of interest and won't be for a long time, there are some very attractive options through the likes of the insurance companies. And again, the important thing is to ensure that you are getting these products at a very low cost. Some of you may have already taken some of these schemes through the likes of Irish Life and Zurich and Aviva and so on, which is absolutely fine. But what I would ask of all of you is just to check in and say, well, okay, what are the costs involved? Where are my funds invested? And are they really working for me? And it's something we can offer clients, as I say, without any cost or obligation on your part. So finally, just to kind of talk about protection insurance, not the most exciting topic in the world, I suppose, but what I would say is that I continually have had conversations with clients about how we can save the money. The easiest one I always find is mortgage protection insurance. So anyone that has a mortgage would have been forced legally to take out mortgage protection cover, which is typically the life insurance on your mortgage. I worked in AIB previously for 6 years when I first came to Ireland. And I used to be that financial advisor in the back room that once the mortgage was agreed, they would have been brought into. And we were told to sell the Rolls-Royce type mortgage protection. This was the mortgage protection with the serious illness cover, income protection if we could get it from them at the time, and any other ancillary benefits that we could throw in. Not particularly cost effective. Certainly we didn't discount those costs because we kind of knew that we had a captive audience. What I would say to anyone that has any kind of sense of that experience is, it is absolutely available to you to change your insurance at any time. You're not bound by any annual renewals for that. And I would ask you all to consider that, because there is, in my opinion, significant cost savings that can be given even on an equivalent basis. So that's one thing. And I would then extrapolate that out to other forms. I was talking to a client yesterday who said that they're paying 170 euros a month for their mortgage protection. And I almost fell off my chair, you know, because for me, that is much too much to be paying. And by looking at what they actually had for that, they could have actually achieved the same cover for roughly half the cost. It's a massive, massive, you know, variation that we've seen in the industry. The other forms of insurance, as I said, would be things like health insurance, which we do not sell, but we can certainly advise you on. We advise on things like health insurance, car insurance, and so on. And if that's all somebody wants to talk to us about, that's absolutely fine. I have no issue with the fact that, you know, we may not make any money from giving clients advice. I'm 46 myself. I'm married. I have 3 children. I have been in a position whereby, you know, I've had these kind of arrangements in place where it's useful to work with clients over a longer period. And we want to ensure that we are providing good advice to individuals. In terms of areas that we would focus on with people, obviously there's been a lot of talk about COVID and the effects it's had. This type of insurance cost will probably go up on the back of obviously what we've had seen happen over the last few months. And again, it's probably relevant, in my opinion, for people to just take stock of what they do have and make sure that they do have adequate insurances, but in the right areas. Many of us, as I said earlier, may have changed jobs. We may have set up a company where we may be contracted to a company that we're working with. And that in itself would give, I suppose, avenue to checking in and seeing, you know, what we are paying for and whether that's still fit for purpose. So just to summarize, and I do appreciate your time, I've covered off on quite a number of different areas. I hope you found it of use. I will endeavour to forward on the slides to you just by way of, I suppose, providing a little bit more background. Myself and other advisors within Alpha Wealth will be available to have a discussion with, whether it be by a follow-up Zoom, whether it be potentially in person, or indeed over the phone. And we're more than happy, as I said to you, to kind of give you this type of advice. I'd like to finish off by saying thank you again for your time. We do appreciate it. And as I said, if anyone is interested in the follow-on session on the 15th of July, so 2 weeks today at 1 o'clock, specifically geared towards the tax-back scheme that I referred to, then obviously please feel free to revert back and we can add you into that panel. So thank you very much again, and I hope the rest of the day goes well for you. Thank you.
Thanks a million, Nick. Thanks for your time.
Thank you. Thanks again. Take care.
Thanks, Nick. Take care.
Take care. Bye-bye. Bye-bye.
Cheers, Nick. Thanks.
Thank you.